Okay, so hello everyone. Let's start the today's session, concept part 4. And in this discussion, we are going to learn the mainly the two things. One is called technical indicators, and another concept called divergences. And within technical indicators, there are two concepts that we are going to learn: MACD and oscillators. So let's see what are these one by one. So some brief introduction about technical indicators. So the technical indicators are known as maybe some kind of a tool um, from which derived from the calculation of historical price, volume, etc., and that helps in speculating future price movement. So I mean, any technical indicator. I mean, there are many technical indicators in the technical analysis, and all the technical indicators, the base data are only maybe three. One is very widely used, that is the price point. Second data is the volume, and maybe the third one is the time. We can say, okay, and where I mean, in the combination of these three, I mean, any of these technical indicators are getting calculated. And mainly the price point is one of the most used primary data, which is used for calculating or generating these technical indicators. Okay. And also, I mean, these technical indicators are plotted along with the charts. How it will be plotted, we'll see in the practical. And they are, as I said, they are mostly supporting tools for our analysis purpose. And as we discussed initially, these are, I mean, the technical analysis are MACD. The full form is moving average convergence divergence. Okay, so if we don't remember also the, I mean, the full form, that is absolutely okay. When we'll start using, we will, I mean, we will get used to that. Okay. And the oscillators, within the oscillators, there are two kind of oscillators, that is stochastic and relative strength index, that is well known as RSI. Okay, so now starting the little bit detailed about these in the individual indicators. The first one is the MACD, moving average convergence divergence, and that is also called as a trend indicator, or in short TI. So to search in these indicators, I mean, their typical name will be MACD in any one of the charting platform like investing.com or TradingView, or even within any trading platform. MACD will be the known, but don't confuse if we get somewhere about uh, the same name called TI or technical indicators. All right. So MACD indicator has primarily three components. Okay. So we'll see how it looks like in the actual chart, but it is there below. This one is the snapshot of the MACD um, indicators, where it has three components. First one is called MACD line, that is the blue line. So if in this picture, if you see, there are the two lines, blue line and red line, and there are the verticals, lines. So the MACD line, that the blue line is called MACD line. Okay, and it is calculated um, by subtracting 26 period EMA from 12 period EMA. Again, you don't need to remember this information, but just to satisfy your mathematical mind, we are just knowing that, okay, how this MACD line getting calculated. Okay, and the second line, which is the red line, it is called a signal line, and this signal line is calculated by the 9 period of EMA. Or okay, so well, whatever the 9 last period of that EMA, and it is again, it is again, I can say, depend on the time frame. no matter whatever the time frame we are selecting from 5 minutes to 1 month. Uh, the for the calculation purpose, same concept or same calculation applies, right? And how to use that? So when the MACD line, that means when the blue line is crossing the signal line, that is the red line in upward direction. So that typically gives the buy signal. And in reverse, when MACD line is crossing the signal line, that is the uh, blue line is crossing the red line in this example here, in the downward direction, and that typically gives a sell signal. Okay, so in this example, let's say like at this level, okay, this is the lowest level. So where the blue line is crossing the red line in an upward direction, so it is typically treated as a buy signal. And this point and this point, there are similar other examples where the blue line is crossing the red line in downward direction. It is a potential sell signal, right? The third element, we can say the vertical lines, the red vertical lines. These vertical lines are known as histograms. Okay, and basically these vertical lines just a difference between the MACD line and the signal line. So at any point of time, whatever is the difference means the vertical difference between, if we draw a vertical line at any point of time, whatever will be the difference, uh, that difference will be plotted as a histogram of vertical line, considering this on the x-axis. So if the difference is positive, it is the no upside of the horizontal line, and if the difference is negative, then it is the downside. Okay. So again, I mean, histogram, I mean, this is not very widely used. However, one usage of histogram line is by just looking at the histogram line. Also, you can able to see that overall trend of the market or that particular stock is in a maybe upward direction or downward direction, or maybe a sideways. Okay. Otherwise, just by looking, basically we are using the MACD signal line just to know about the positive and negative crossovers. Okay, so this is all about MACD. Is there any question on this?
Uh, can you tell it again? I mean, how this blue line is calculated? You said something, no, that
Correct. So blue. Okay, so let me quickly show you the same thing in the chart. Maybe that would be, I believe, more helpful. Um, let's say any, I mean, say any plain chart I will open
I
up.
think it says subtracting 26 from 9, is it?
Correct. So as per the theory, it says the blue line is calculated by subtracting 26 period of EMA from 12 period EMA. So whatever the exponential moving average of 26 period, that means if suppose we have selected the daily chart, so
Hmm.
whatever the EMA value of last 26 days minus the EMA value of last 12 days. So that difference is called that. So if that difference is plotted on the chart, and that will give you the, I mean, the line chart. If by connecting all the dots, it is giving the MACD line, and which is already, I guess, in the form of the indicator, which is it is inbuilt into the investing.com itself. Maybe I'll just bring it for you so it will be more clear. Um, Let me see any stock. Which one we see? Let's see, maybe Bipro. I think most of us from IT, so it will be what happened. Okay, Wipro. No, not in the United States. We need Wipro India one. That is Wipro Limited. Yes. Okay. So let's see how to plot that one. So again, go to this one, technical indicators one, and here just type MACD. Okay. So the indicator will be added on below the chart of the same, the pricing chart up, and it is up to you. I mean, what if you like in keeping it upside, you can do that by, this is the toggle arrow. Typically, I mean, I prefer it down. So if you see here, so no matter, I mean, whatever the time frame you select, I have selected maybe, for example, daily. Let us, if I keep it maybe the weekly time frame, my MACD will also display in the weekly form. And again, the theory is whatever the EMA value. So if, let us add maybe just for the learning purpose. So what is say that EMA value of, let's say here, 26, and next one was 12 period. So next one I will say 12. So that MACD value is getting over any point of time. The MACD line, that is the blue line, is calculated by subtracting here. Let me also, just for differentiation purpose, let me change the color. Okay. So red one is the EMA value of 26, and the purple one is the EMA value of 12. So any any point of time, whatever the difference between the value of 26 EMA minus the value of 12 EMA, whatever the number will come, that will be plotted below, and that will form the blue MACD line. Okay. So mathematically, this is how it is happening, but I mean, for the technical analysis purpose, this is already in built. Some great guys has already invented and given us, I mean, develop it, and we just need to learn how to use it. That's all. Okay. Any other question on this MACD? Great. So moving to the next one. Okay, so next one is just a maybe just an example. So maybe you can quickly go to, this is a, for example, this is the example of ICICI Bank. Okay, and it is along with the price chart, the MACD line is also plotted. So if you look at here, by just looking the MACD, wherever the positive crossover is happening, that means the blue line is crossing the red line in upward direction, and that could be considered as a potential buy signal. At the same time, when a blue line is crossing to the red line in a negative direction, it is called a negative crossover, and that would be a potential sell signal. And there are a couple of more examples in the same chart. Okay. And there is just another example of Axis Bank, where you can see that, okay, wherever this positive crossover happening, okay, you can consider is a potential buy signal. And again, along with a few more indicators, which or concept that we have already learned or we are going to learn, will apply, and then uh, to make our conviction strong, okay, to increase the chances of our speculation or predictions. Okay, and again, this sell signal is a negative crossover, is giving the sell signal, and few more examples of buy and selling based on the MACD positive and negative crossovers. Okay. Any question on this concept? Because these are the, I mean, concept generally we, when we start the analysis of the chart, we will be starting from these indicators first, and then moving towards the candle and the chart pattern, and etc. etc. Okay, great. The second concept is called oscillators. So within the oscillators, there are, as we discussed initially, the two types. So what are basically the oscillators? Maybe we can spend a couple of minutes on that. So basically, oscillators. Okay, why it is called oscillator? Because the value of these indicators, um, kind of a fixed between 0 and 100. Okay, it's like a stock price. Any stock price can start maybe from its minimum value, and it can go. There is no upper limit. Right. But these two indicators, okay, it has the upper limit and lower limit. So it can go maximum at zero and sorry, minimum at zero level and maximum at 100 level. And that is and it, in other words, it oscillates between these 2 points, kind of a sinusoidal wave. And that is why it is called as a oscillators. And typically it provides us maybe at the extreme emotions. Extreme emotion means that, okay, if the market is really, really overpriced or undervalued, these kind of is extreme emotions of the market, it it provides and it helps us to understand. Okay, typically, I mean, those extreme emotions are called known as a overbought or oversold. I mean, in practical scenario, there is nothing called overbought. Okay, number of shares sold equal to number of share bought at any point of time. But for a conceptual purpose, whenever it is like oscillators values are really, really low, maybe I can say, I mean, it cannot go any point of time to 100 or lowest value at zero. Maybe the minimum value I have seen maybe bit somewhere in around 10 and maximum value somewhere around 90. That is okay. So whenever it is touching these two extremes value, maybe from 10 and the 100, these will be treated as extreme in, in a falling market and extreme in a uptrending market. Right. The other thing about they well in a extremely sorry, they work extremely well in a trading range. That means the sideways. So basically, whenever we see that market is moving in a sideways direction, but is still in a sideways direction, also it keep on oscillating between these two lines, and that gives a indication that, okay, even it is a sideways movement is happening, but what could be the potential movement in future after the sideways trend gets over. Okay, and how that, I mean, it indicates, we will learn in the coming discussions. So let's discuss one by one. So first one, the stochastic. um so as we have added the MACD, stochastic is a similar way. We can add from the technical indicator list by typing. I mean, if you type just a SO, let me show you. I think that quickly that will be more helpful. I'm just closing here on the same chart. If you go to this technical indicator or indicator drop down, if you type STOCH, so stochastic and stochastic RSI, but we need to select the stochastic, the plain stochastic, and it will add you the indicator by default below the chart. The only change we need to do that, okay, if you look at the blue line here, it is a very much zigzag. So to make it smoother, we just need to format it. So hit on the middle icon and go to inputs. Smooth, the value is length 14. No need to change anything. Smooth K value is 1. Just change it to D. Sorry, 3. Okay. And smooth D is already 3. So if we just make only one change, it will give you a smoother value of stochastic. Right. So this is how we can add the stochastic into the chart. What are the significance? So significance is, again, it is in similar to MACD. So wherever it is, the blue line is crossing over a red line in a positive direction or in an upward direction, it is called a positive crossover, and it also gives a buy signal. And whenever it is uh, the blue line is crossing down the red line in a negative or downward direction, this is called as a negative crossover, and it gives a potential sell signal. Okay, and if the oscillators are maybe moving above 80, okay, so if you look at this value, so this is maximum value is 100 and minimum value is at 0, and this oscillators keeps on oscillating between these two ranges. And when oscillators spend a maybe reasonably longer time, okay, in a in a in an area which is above 80. So it is known as a overbought region. Overbought region means it is at a for a certain, I mean, comparatively longer time, the stock price or this indicator value is moving above 80. Okay, so that situation will be called as overbought. And similarly, whenever that it spends a time in a area which where the value is below 20, and that particular region is known as a oversold region. All right. Yeah. So this was all about stochastic. Next one is called Relative Strength Index, RSI, one of the most powerful index I can say, um, which I found, and I personally use this indicator a lot. So from the chart perspective, how to add them? So if I close the stochastic value here, and again go to the indicator list, if I type here just RSI, it will by default get added at the below of the chart. Okay. And again, it oscillates between 0 to 100. And again, that is why it's named as the oscillators. How to read them? So it is again a very simple, and it has only one line. MACD and stochastic has a two line, the blue and red. By default, I mean those line also we can change, but typically we don't change that line. RSI having just only one line graph or line chart, and how to read this one is whenever the RSI line is providing the uptick. Uptick means suppose it is price is coming down and the RSI value is also coming down, and when it reverse at any point of time, that will be the reverse means it is, I mean, suppose you are here, it is giving a signal of it is going to go up, and that particular up movement is called as a uptick, and it gives a potential buy signal. And the same way, when it is it is moving in upward direction, and whenever it is reversing the direction of that up movement, that particular uh, reversal is called as a down tick or treated as a potential sell signal. Okay, so up tick is the buy signal and down tick is a sell signal. That is a very simple way to remember, right? So, based on these three MACD, stochastic, and RSI value, our initial analysis of the chart will get completed. If these, I mean, when we are learning the implementation, there we will discuss in length. But whenever we are performing the chart analysis, first we'll be analyzing these MACD and oscillators. And if all are giving, I can say, the same indications or same speculation or prediction, then only we proceed the analysis further. Because maybe sometime it may also happen that by looking at the chart and these indicators, it may give a contradictory view. So whenever that happens, simple recommendation is that, okay, do not take any decision at that point of time. Just wait for some more time, depending on who you are. Are you a day trader or positional trader or maybe medium to long term investor? So depending on that, what you are, you can choose to wait for a certain period of time, okay, and then do the analysis further. Okay, so the another concept, which is again a very important concept, it is called divergences. Okay, just by meaning of divergences means a very simple English a word. So divergence means something, getting separated or maybe moving away from each other, right? drift apart or move away from each other. So what happened that sometime the movement of the price and the movement of the oscillators, okay, I mean in general those movement will be hand in hand, but sometime these movement of the price and oscillators may not be in sync. Okay, and that's such kind of phenomena we call as a divergence. So when I say that, okay, is not in sync, what I mean is, let me quickly uh, show you something. Maybe you can understand in a better way. So look here, this is the Wipro example. So this is the kind of one of the lowest point of Wipro, right? And from here, the price reversal has happened. And if you look at the RSI also, from the same point, the RSI uptick has happened. So stock price is going, I mean, it started moving up and up. So till this level, it moved up, but after that, it again falling back and make a, I can say, the lower low. Lower low means this low is lower than the first low. But if you look at the similar value of RSI, okay, the price has fell down from this top to the lowest recent value. But RSI, if you see, RSI doesn't, uh, I can say, provide the company. I mean, RSI moved, but not as much as the price value. Okay, so that is the, that was the definition of, like, when we are discussing that. Okay, the the movement of the price is not in sync with the RSI value. So such kind of situation will be treated as a divergence. How to exactly identify? There are some more uh, analysis or indicator that we need to put. It will tell you. Okay, it's not basically the indicator; it's just a simple analysis. So we learn about these two different kind of divergence. So first one is called a bullish divergence. Bullish divergence is nothing but, okay, the price is going up and up. Okay, and either price will show that, okay, it is making a, um, when the price is making a equal low or the lower low, that means, okay, not in upward, sorry, the price is moving in a negative direction. Okay, are this in the negative movement, what is happening? uh, Let us me see, show you the example of, so this example, right? So this is another example of Tata consultancy services. So if you look at this example, what is happening? This is one of the lowest price point, and from the year it reversal happened, it went up, and next time it again made a all-time low. Okay, so the price, this price point is the lower than the previous price point, and as per the Dow theory, this is called as a lower low. That means this low is lower than the previous low. Okay, at the same time, if we add the RSI and stochastic value, um, here, maybe RSI, uh, we cannot say very um, clear divergence, but again, just for understanding purpose, if you see, the price movement in the downward direction is very clear, visible, that, okay, it has came down. At the same time, the RSI value movement is not in sync. I mean, the way price has fell down, RSI value is not falling down at that in a similar way. And the same thing for stochastic also. So at the same price point where it was lowest, this low and this low, ideally, the stochastic and the RSI should be giving the company of the price value. Okay, that means if the price is making lower low, that is stochastic and RSI should also make a lower low in a uh, ideal scenario. But whenever that is not happening, the price is making lower low, but oscillators are making a higher low. Higher low means the current low is higher than the previous low. That is why it is called as a higher low. Okay. And same thing happening for the stochastic also. So if the RSI or stochastic value is minimum equal, or the current low is the higher than the previous low, then the this kind of phenomena will be called as a divergence. Okay. Um, and why this is happening? Okay, because there might be some kind of a fake. I think initially someday we were discussing about the um, upper circuit and lower circuit. Okay. So even suppose there are some persons who has a really, really big pocket or a very rich guy, and they wanted to do something. Something means manipulate the market, and they will pump very huge money because there are rich people, and they have the potential to move the market. At the same time, they can move the price point, but maybe considering other factor like volume. Okay, one person may not create a volume of multiple person, so those value will typically will not get displayed on your chart. Those values will be there by there in the system through which that these data will get calculated. Okay, and if some such kind of I can say fraud or somebody is trying to manipulate the market, it will display. Or okay, as a technical analyst, you should able to know that okay, yes, this is not the real breakdown or lower low. There is something wrong, and what is and how to identify something wrong. This is stochastic and RSI value is one of the way to identify the market manipulation situation. Right? Any question about bullish divergence? Okay. So moving to the next one, that is called a bearish divergence. So one question like bullish divergence means very simple. It is typically it happens at the bottom of any trend or bottom of any stock. And why it is called bullish means there is a divergence that okay, and which is going to move the market in a upward direction. That means after this divergence, market is going to go up, and that is why the bullish term came here. Okay. And similarly, the bearish divergence means it is typically it will happen at the top of the trend. And when it will happen, the okay, when the price movement is going to at a higher level. That means the price at this level is the higher high as compared to the previous high. Okay. Uh, at the same time, if you look at the RSI and the stochastic value, they are not moving along with the price. Price has moved from this level to another level, but RSI is saying no. I mean, your movement don't have that much strength to trust, and it is giving you a kind of a clear indication that okay, there may be a potential chances of reversal of these stocks. Okay, and once you're able to identify these divergence very very clearly, I think Cebu or somebody was asking that okay, when we can able to sort it at the top. So divergence is one way through which we can identify the potential reversal. And maybe if we are already in the trade, maybe if have already purchased it, we can plan to sell it here when you see divergences. Or maybe you can do the short selling. That means you can sell it here, and maybe when the price becomes low, you can buy it. Right. So this is example of the Infosys, and this is I think the recent, not the recent, the weekly chart. Yeah. So I can say it's the last somewhere in the last month, last year data, not even before that, 2017. It's a it's a old data. No, no, no. Sorry, it's a reverse. So 17/1/2020. So yeah, last year, last January data, where the divergence is happening, and after this divergence, if you see the park the price has started falling down. So that was a time when that price was around I can say 1900 or so, and after this divergence it started falling down and it went up to somewhere around closer to 1200. Okay, so how much? 1950 to around 750 corrections, 750 rupee correction has happened so far. um yeah. So bearish, this was the concept of bearish divergence. Okay, why bearish means after this divergence, the market is good. going to become a bear. Bear means it is going to do the correction mode or bearish mode, or it is going in a downward direction. So is there any question on bearish divergence? Okay, assuming no question. And luckily, this is the end of the today's concept session. Okay, so I will